Hi, this is Amir with the Bulletin Board Heroes here at Box Markets for Friday, the 28th of October. And starting off with the FTSE 100, where we've still got this mildly descending price channel from the end of September. Looks like we peaked out at the top of that as well, around, well, just below 7,100, below 7,100 on an end-of-day close basis. Have a risk of retracing recent gains, maybe back down towards 6,900, something around that area. Bad sign normally when the RSI fails in the 50s. We saw that back in last month, and obviously the situation now looks like that. We also had that back in June, etc., etc. So just slightly disappointing to say the least. Only back above really the 7100 level. If you're really fussy, the 50-day moving average at 7150 really will reverse the post-August breakdown that the FTSE has had. Moving on to the stocks, which there are not actually that many, which is rather telling as well. But starting off with Angus, and here you can see that after that little, well, I suppose it's a couple of weeks bear trap below the September support there, around 1.75 pence, we went down towards 1.5. That was old resistance. So, but post March, well, March to basically May resistance. So we tested that old resistance as new support. Nice development there with the MACD indicator, so that just is about to cross. We've also had the RSI go back above 50, and the price itself break that resistance line there from last month around 1.25 pence, and we're pushing through the rising 50-day moving average. So it should be the case that on this occasion, after a delay, we head up towards the December resistance line projection as high as 3.2 pence over the next 4 to 6 weeks. But we really need to obviously hold that 1.5 pence zone. Moving on to Avacta, which is a favourite amongst some. Here we've had the solid support for the shares between 90 pence and £1 hold once again. Broken that line of resistance there from last month. That was around 107, and above that, hoping for a move back towards the 120s, maybe the upper 20s, which is upper 120s, which was the initial September resistance, and ideally, of course, 140 maybe by the end of the year. But really, the more time we spend above the 50-day line at 110 or that broken resistance line around 107, the better it is for Avacta, quite logically. On to Angle, and here we've got a situation where we bounced off the floor. It looks like we bounced off the floor of a falling trend channel from the end of July. Top of the channel there, just below the 50-day moving average, so that's a 50-day line around 64, so that's our target, while we hold above around 48 pence, which was resistance on the way down. So looking rather better for Angle after an extended decline. Speaking of extended declines, so we're looking at Canadian Overseas, which is actually having quite a nice little dance on the 50-day moving average. It's been doing that all month, which can be regarded as healthy. Especially when the 50-day line is now rising. So we've had a few days of that as well. Basically, this week we've seen that starting to rise. That's normally the forerunner of a move to the upside, maybe towards the 200-day moving average at 21 pence, which is basically post-June resistance. Anyway, if you're a fan of the shares, you might be looking for that April line of resistance heading towards 26 pence by the end of next month. But I think we just be grateful that we stay above the 50-day line at 14 and head up to the 21 pence area over the next few weeks. ECR Minerals, the next contender here, and we've broken our initial target, which was around a penny. Above that, on an end-of-day close basis, looking for the next resistance up, which is around 1.3. And if we can get a decent weekly close above the 200-day line, currently at basically 1.1 pence, that should be achievable over the next couple of weeks. Big plus point here on the daily chart was the unfilled gap to the upside through the 50-day moving average. It's one of our more reliable signals, and we've had the follow through, which is very pleasant. So 1.3 hopefully sometime during November. Moving on to Jangada, which has been toying with recent resistance around the 4 pence area. Looks like we might finally start doing a bit of a Canadian Overseas type setup there, so dancing on the 50-day line near the lows. That's sort of strengthening pattern, and we've had decent candles there too. So above the 50-day line, currently at around 3.6 pence, looking for the 200-day moving average at 5.3 for Jangada after the extended base below 4 pence. Quadrise is the next contender, and you can see that we've had a decent move already to the upside after that saucer-shaped reversal, breaking the 50 and 200-day lines. Nice, what looks to be a nice mid-move consolidation, so that would take us up to 3.5 pence, and a line of resistance from back in December, probably even higher than that, 3 3/4. And that's valid while we hold above recent support at 2. So above 2, looking for 3 3/4 by the end of next month. Just a couple of stocks to go now. One is from United Oil and Gas, which has delivered a reasonable update today. Rising trend channel from July, top of the channel heading towards 2 1/4 rather, and we would hopefully see that by the end of next month. Only back below 1.5, really delaying the upside scenario, recent support. Finishing off with Vela, and here a bit of a slow situation and one of those micro share prices as well, but looks like we've bounced off the bottom of a broadening triangle from March. That was around 0.01.5, if that's the right number, and the top of the channel there, top of the triangle rather, up to 0.04. Maybe we get that by the end of the year, if this is indeed the bottom with the bullish divergence, and also a weekly close above the 50-day moving average just around current levels. That's it from me today. More updates over the weekend.